Now you focus on banks, investing in banks and financial services. Tell us, how healthy is the banking system right now when you look at across the world?
Sure. Thanks for having me today. The banking system for the U.S. has never been stronger. Capital levels are twice what they were back in from the early crisis days. Asset quality continues to be very strong. Non-performing assets have even ticked down over the last couple of quarters to still very low levels. And we're just seeing, no weakness really right now in the balance sheets.
Now, I know you've talked about how big banks are kind of in the penalty box and community banks, regional banks are where it's at. What activity are you seeing there?
Right. So it's been sort of the Main Street versus Wall Street theme when you think about community banks and you think about and the larger money center banks. And there's been several regulatory relief bills that have been passed bipartisanly through Congress that have given the ability for smaller banks a little bit more ability to grow and merge and acquire each other so that they can get economies of scale. And so it's just been a lot of opportunity for them.
One thing I've always been curious about, when you see the growth of regional banks, it means that you have a couple banks maybe all in the same place, potentially all vulnerable to the same exogenous shocks. Isn't that troubling for the system on some level?
No, so community banks tend to have pretty well diversified balance sheets. You'll see that they have probably a third in commercial real estate, a third in 1 to 4 family mortgage, some C&I, commercial and industrial lending, and then a little bit of consumer. So what you'll have is a lot of different legs on a stool to support the overall balance sheet. Plus, there's those assets are supported by low-cost community deposits that are very sticky and aren't likely to leave the bank.
Okay, well, what's your hot investment play right now? Where are you seeing the most action from your perspective?
Right, so we're really active in the bank subordinated debt space. We've been purchasing this particular type of asset since 2013. We were one of the first movers in this space, and our intention is to build that out into Europe going forward. So I think we can have a first mover advantage over there, where banks are now beginning to come out of the crisis there a little bit slower than the U.S., are having some regulatory changes that are going to allow for Tier 2 capital to be counted, and we think that there's a big opportunity for us there.
Right, lots of investment opportunities. I am gratified, having come to lots of these events like SALT in Abu Dhabi as well as in Las Vegas for the last few years, to see a growth of women. But I notice, and my colleagues have reported extensively, there are still very few women in senior investing roles. You are one of them. What do you think causes this situation at hedge funds, at private equity firms, and what can we do to maybe change that?
That's a great question, Simone. I think that for me, my experience was when I came to FBR back in the early 90s. When I looked around at that firm, there were lots of women in senior investment and senior roles across the firm, and so I didn't realize, I was naive, I guess, that was unusual. It wasn't until I got maybe into my 30s that I realized that it's actually more challenging for women. And so for us, I think, being in senior roles in investing firms, it's our responsibility to really bring other women into it with college recruiting, with talking to, when we're doing our hiring, to, make sure that we have a diverse, pool of people, because there are women that are coming up through the ranks in college that, can provide value here.
Anything in terms of maintaining those women when they do get into more senior roles?
Well, I think overall the culture is shifting away from, what it used to be, and allowing more family-friendly atmosphere for women to continue to grow in their careers and not feel like they have to make a choice.